Good morning. Thanks so much for tuning into the trade setup. On the domestic side, at least one Q uh, seems to be not creating too much of a stir from a market's perspective. The exit polls were out yesterday, and I think the summation of the exit polls seems to be that there is no gyration when it comes to the state of Uttar Pradesh. Really, from a market's perspective, that's what matters. And the four exit polls that we've gotten in our stories and the ones that seem to matter the most seem to suggest that the incumbent BJP government will not have too many hiccups in holding on to the majority. If Axis My India is to be believed, there will be significantly higher majority. But even if that is not the case, it does seem that uh, the incumbent BJP government will come back to power. From purely from markets perspective, I have no political inclinations, but purely from markets perspective, uh, this is good news. You would have to say. In fact, Akhil Bedi, who is the director of South Asia initiatives at the Asia Society Policy Institute, says that the majority, irrespective of how it comes in, is still a majority, even if it's diminished, and shows that despite the higher inflation and the recovering economy, the BJP and Prime Minister Modi are still quite strong. And the good part about this, viewers, is that uh, corporate India, as well as others, maybe even the investing community, not maybe even the investing community, will see this as political continuity into 2024. Uttar Pradesh leads the way, Lucknow leads the way to Delhi, so to say, and this would seemingly be viewed that fashion. So, purely from a policy perspective, policy continuity perspective, this is great news. So yeah, the market men should be happy with this. The last thing, frankly, we needed was this adding uh, to the cocktail of potent events that are underway now. Potent events underway. I Much as people were hoping that there will be some respite on oil, and yes, prices did cool off a little bit, but um, the developments don't seem to be quite that pleasant. So US lawmakers have struck a deal to ban Russian crude from US, that is. Russia has threatened to cut gas flows to Europe via the Nord Stream 1 pipeline as well. Uh, so that could really set the cat amongst the pigeons when it comes to gas prices. The German Chancellor, Olaf Scholz, ruled out banning Russian oil and gas imports, saying there is virtually no alternative to that right now. So which way does the pendulum is swinging both ways. Which way does it finally rest? Nobody knows. But uh, this certainly is not negative for oil and gas prices. If anything, uh, there is maybe some more upside there, and that's just bad news for countries like India. Higher energy prices and higher energy prices than where we are right now already is the last thing we want, really. But be that as it may, that's the thing. And I think the fears of stagflation, higher commodity prices put paid to European markets yesterday. They impacted the US markets yesterday as well. So US markets, if you see overnight, were down, and the futures as we speak are also trading lower. So global markets are looking slightly wobbly. You have to keep that at the back of your mind. We'll come up on your screen one by one. First, the US markets. And frankly, if you just look at what's happened to the world market territory at large, I mean, the world markets per se are looking uh, like they've entered into the correction territory. The MSCI All Country Index, if I'm not wrong, there's this chart on the Bloomberg terminal which shows how the MSCI All Country Index is actually in the correction territory, 10% lower, and that's not great news. Okay, I think we should be getting the charts up in a minute. But Asia and SGX Nifty too should be showing you ticks of red. I mean, SGX may be slightly different than the others today, simply because of the UP state elections. And remember, last night, just purely by virtue of the exit polls showing what they were showing, uh, India was trading slightly differently, but but uh, the other markets were certainly in the red. Okay, so one by one they'll come up on your screen. This is US. Let's just move quickly on these charts. This is US. The This is Asia, and that is largely looking wobbly, uh, but not as bad as yesterday. SGX shows a bit of an uptick, I presume, on account of, okay, no, a 91-point downtick for the SGX as well. Is this? Yeah, but the SGX Nifty website shows a bit of a green. Anyways, mixed bag, not as bad as the rest of the markets, presumably because the UP election verdict seemed to be positive, or not the verdict, the exit poll seemed to be positive. And keep in mind, as I said very quickly, that the MSCI All Country Index shows that the world markets have entered the correction territory over 10%, all country index over 10% from the recent peak. So that's not great news. Now, let's move on to the key cues for today's session, the trade setup and the equity flows. So markets are near key support, and there are select quant indicators which indicate a pullback ahead. I wouldn't bet on it, but quant indicators seem to suggest that we are in oversold territory and there could be a pullback ahead. So usually quant indicators score over individual sentiments. So while I may not think so, the quant indicators may get proven to be right. And from a bull's perspective, I hope that is the case. So let's wait and watch. I think what is the most common trade from a macro investor's perspective, and there are two or three very smart macro investors that I kind of have access to, that I speak to and seek advice from. They are long dollar and short INR in a big way. So let's wait and watch if that currency market blow up does happen or not. Irrespective of what happens to equities, by the way, the rupee may continue to depreciate, just looking at the macro. So keep that at the back of your mind. And very unlikely that BFSI will come out of pressure until the large FI selling subsides, and it's showing no signs of subsiding. Yesterday or day before yesterday was $1 billion. Yesterday was nearly $1 billion, 7,482 crores worth of selling from the FI side. So that continues unabated, unfortunately. Now, what are the stocks to watch? I'm starting off with the MOV function as the first point to just show you the kind of relative performance that some of the oil and gas names had. Actually, not all oil and gas names. The likes of Oil India, HOEC didn't do as much, but ONGC had a really sharp up move in trade yesterday. Just look at the kind of gainers that some of the others were as well. The likes of MRF, Sheila Foam, etc. There's some interesting moves there. This seems to be more volumes as well, but the net change on some of the stocks was pretty strong, particularly in the IT space as well, which did reasonably okay for themselves. ONGC was a big mover in trade yesterday, so that's the other one that people should focus on. And commodities, by and large, are stocks that people should keep in mind. Hindustan Copper, for example, nickel zoomed on LME yesterday on reports of a short squeeze and supply disruption. There's a lot of fear that Russia, which also contributes significantly to nickel production, might have an issue. So watch out for companies like Hindustan Copper and some of the others. In fact, what we have done today is get you a sense of what is the last price for some of the upstream and some of the metal companies versus the consensus price, and therefore the return potential. So ONGC, the last price was 186.95. The 12-month target price, Bloomberg consensus estimates, is 208.5. So there's about 11.5% return potential despite the up move yesterday. Oil India did not move yesterday, and now you kind of know the 12-month consensus target price is 276. So return potential is just about 10.8%. Keep in mind, I know that some of the likes of JP Morgan and some of the others have said that they might expect, or UBS has said they might expect they see 100% upside on these names, but the Bloomberg consensus estimates is just about 10.8%. In fact, Reliance has a higher consensus return as compared to ONGC and Oil India both. Keep that at the back of your mind. Some of the metal names, the likes of Vedanta and Hindalco, are interesting as well. Vedanta, the last price was 387, the return potential about 11.7% as per Bloomberg consensus. And Hindalco, which has been a bit of a crowd favorite of sorts, the 12-month target is 661 and the return potential is 6.7%. Keep in mind that until about 6 or 7 months ago, Hindalco was trading at about 400, 410. It's had a really strong up move in the last 6 months, as have all metals, but Hindalco in particular. You keep that at the back of your mind. Some stocks which saw promoter buying include a Chambal Fertilizer, a Maharashtra Seamless, and a Grasim. All of these have seen promoted entities buying some shares in the last 5 to 10 odd days. A few others have also. I thought these were the most pertinent, so we brought to you. And two very interesting brokerage names before we wrap up trade setup today. One of them is Hero MotoCorp. Now, the consensus is that the two-wheeler companies and the incumbents are undervalued or well valued, and therefore could continue to see upsides. I thought the counter view is important. it's best to not be in an echo chamber. So the counter view on Hero is interesting. From Morgan Stanley, they've retained the underweight. The target price has been cut to 1937 from 2400. They are saying that they are taking into account the weaker than expected volumes and lower earnings estimates. They believe the two-wheeler industry is passed on all cost pressures to date, but the continuing inflationary pressures could delay the demand recovery. And particularly for Hero, because the cost inflation is especially higher in the entry level segment that Hero is exposed to. And why it is higher? I mean, the cost inflation is same for everybody, but an entry level player cannot pass on cost increases as easily as a premium player would. I mean, a person who is buying a 2,50,000 bike can very easily pay 2,55,000 or 2,60,000. But somebody who's buying about a lakh rupee bike cannot quite pay the 10,000 rupees so efficiently, because on a percentage basis, it's a much higher percentage increase in cost. So yesterday, because of that insurance cost piece, Eicher Motors had corrected quite a bit. Today, Morgan Stanley's cut the target price on Hero, and the arguments seem good. Hero is a well-priced company, and it's not an egregiously priced two-wheeler company or auto company. But I think the argument from Morgan Stanley is decent. So anybody who's bullish on Hero MotoCorp, I'm not telling you please change your stance because of what I'm bringing to you, but the arguments, they are worth considering. So keep that at the back of your mind. And like I said, defense is front and center of everybody's attention. Germany, China, even countries like Denmark have increased defense expenditure. Everybody wants to be Atmanirbhar, so to say. CLSA's view on HAL is interesting. They are rating a buy and a target price of 1740, essentially continuing being positive on the defense companies and HAL in particular. They are saying that HAL has emerged as an integrated producer of aircraft and helicopter versus an assembler of Russian aircraft. It has reduced its share of Russian spares-driven business to 7% of its backlog and 25% of revenue. The, the dependence on Russia is in its repairs and overhaul business, but the well-stocked inventory of spares protects it from sanctions till end 2022. And the stock is inexpensive, according to them, at 13 times FY23 PE, which is about a 34 and a 49% discount to the global aerospace majors and India's capital goods sector. Again, the arguments seem compelling, but do you buy into some of these stocks at a point of time when equities themselves are going through a downdraft? I think that's the question you got to ask yourself. But um, yours, it's divided house. There are enough and more people who are telling that this is a dip to buy. But as we spoke to Andrew Holland yesterday, as I spoke to some other people as well, saying it's very uncertain. I think the Morgan Stanley note today was very compelling, wherein they're saying, is India's resilience a sign of things to come, or is it a calm before the storm? And they say that they don't know. And I think that they are right, because I don't think anybody knows. So be careful. If you are buying, buy selectively, buy into companies which have the earnings resilience and do not get impacted too much by commodity pressures. So maybe specialty chemicals, as attractive as the pocket sounds, may not be the place to fish in right now. You might want to look at other pockets. I'm just using that as an example. There could be other examples which get impacted by commodities. Maybe don't go down that path. Maybe go down for resilience against commodities as a pocket that you want to dip into, if you have to dip into. Stay safe. Thanks for tuning in, and a prayer for everybody who are humanitarian casualties in the ongoing conflict.